All right, welcome to the Aeromir Enigma weekly trade alert update. So Luc has been running this service for, I guess, over a year now, has good results, and I really like the service. It's not too hard to follow, but they're low drawdowns and nice returns. So I really appreciate you bringing it to us, Luc, and looking forward to the update for this week.
Thank you, Tom. Well, good afternoon or good morning to everyone. So we'll jump right in. So as we know, the Enigma is trading exclusively the S&P 500 index using futures. Of course, it can also be implemented using options, but most people actually use the ES futures or the micro E-mini. So both of them are possible. And what I'll do, I'll just walk through the presentation. So I'll share my screen. So I suppose you can all see the PowerPoint.
You got it.
Okay, excellent. Okay, so as we know, Enigma is fully systematic, so it's not dependent on who is executing or implementing or looking at the market. It's a system. So moreover, it's of course market agnostic. It's unbiased to the upside or not to the downside, not to the upside. So from that point of view, it's really open to what the market is telling us that we should be trying to follow and detect. So it's very transparent in terms of what kind of trades we are doing. Now we'll briefly skip over the investment philosophy and the trading strategy. I think most of you guys know that inside out, the various trading engines and timeframes. We'll just spend a minute on that and then go to the performance data. So on the investment philosophy, we know that it's really key exercise in managing what I call ignorance. So we know what the market is going to do. We hope we know it, but of course, in essence, we don't know. So it's really a question of trying to manage that. And so it's really focusing on risk management more than on anything else. So that's why the program assumes that the market is really very efficient, especially in the longer term. But on the shorter term, of course, there are plenty of imperfections. And that can be caused by different things, by the market not having noticed something, what is usually described as an inefficiency. But it can also be due to, for example, a risk premia. So some compensation, extra compensation for taking specific risks. And that tends to be mispriced on a regular basis. And so with the systematic approach, we try to exploit these kind of anomalies or inefficiencies. But to do that, we need different approaches. And that's why Enigma consists of 3 different types of strategies. One is, as we know, is more like momentum driven, so more like a trend following approach. The second one is more like a pattern recognition. And the third one is the hedging algo. So the first one is very easy to implement, I should say, because it's logic. Everyone sees the market is going higher, so we have some bullish movement, positive price development. So there is a positive signal. In other words, we go long. With the second one, it becomes really a bit more tricky because now we have to find some kind of a classification. Is the market truly going up? Is it truly stronger to the upside and to the downside? And if so, it needs to pass several tests. And one test is it has to be able to step over a certain threshold. And by that I mean, so it must be enough bullish power for a long signal that could be confirmed then that being a true significant move to the upside. If not, it's going to skip the trade and not do the trade. So not generate a signal, in other words. So it's much less logical or straightforward to come up with a trading signal using the bias algorithm. While the third one is really very counterintuitive. So the hedging algo is doing nothing but trying to detect some exaggerated moves, either to the upside or to the downside. And it's going to go long and short, not of course at the same time, but what it does tend to do is going to go long when the market just saw some pretty excessive move to the downside. And on the other hand, if we have some very strong rallies, it could detect some short-term extreme price movement to the upside and then actually sends out a short signal. So that's really complementing the two others who are more like going with the trend. The bias is slightly more complicated, but the momentum algo is pretty straightforward trend following. But they all trade on different time frames, and it can be as short as 5 minutes, can be as long as daily data. So by covering these different, what I would call time frames, we can end up with a portfolio that looks at the market from different perspectives. On the one hand, the very short-term intraday moves. On the other hand, the more lasting trends that could develop over several days, if not weeks. But key to all this is, of course, the risk management, and we use a lot of tail risk hedging. That's why the hedging algo is there. We diversify using different methods. So we have the 3 different types of trading strategies. And then, of course, the time frames, as I mentioned. So with instruments, what do I mean with that? We say we diversify with instruments while we only trade the S&P futures. We look at the S&P market from different points of view. For example, we look at the SPY, we look at the SPX, we look at the futures during the regular trading hours. We look at the futures during the pre-market and aftermarket hours. We look at tick-by-tick data. We look at different timeframes, but also for each of these instruments. So we can look at SPY, we can look at SPX, we can look at ES. So it's all interrelated, of course. They're all highly correlated, but still a bit different. And so that's why this diversification really pays off quite nicely. Within the risk management, the key metric that we employ is this maximum drawdown. So where we try to find a common denominator for all the strategies so that we are not overweighting or underweighting a certain strategy because it has a great return or a better return on another one. It's all being rescaled, so to speak, to the same kind of maximum drawdown numbers so that we can truly value them and compare them one to the next. So we know that we focus predominantly on capital preservation, so which means that we are not trying to avoid volatility. And you see that in the equity curve. The equity curve can be pretty jagged, but of course the trend is positive, at least most of the time. And we try to focus essentially on preventing the very big losses, because if we have too big of a drawdown, say a 25 or 30% drawdown, it would become very tough to basically wiggle your way out of that hole. So that's why we try to avoid these kind of black swan events, and that's why we have offsetting trades, and the net position in Enigma is usually relatively modest. So it's really exceptional that we end the day with a long position of, say, 3-4 contracts long or 3-4 contracts short. What does happen, on the contrary, is that during the day we could build the positions from +1 to +2, even to +4, and then towards the end of the day start scaling out of it, so that we end the day with a really relatively modest net position. And there is a good reason for that. We don't trade overnight. We don't have stops overnight. So all the positions are protected only during the times that we are trading. So it's not that we are having a stop that is active overnight and that could potentially protect us. That's not the case. We have tested this, and when we designed the system, it turned out to be much better to forget about the non-regular trading hours and only trade and execute during the normal day session. So the results, we have covered that before. It's, of course, very different from the intraday long and short compared to only looking at the intraday long. And of course, the end of day, which is really a pretty neat subset, focuses only and exclusively on those trading signals that are generated towards the close. And even that one is giving pretty decent results with about a 13% return and for the 15% drawdown. So it has a Sharpe ratio of around 1 as well. So now if you look at the performance data, we see something pretty exceptional, and I should skip to this slide. And that is how few signals we have seen. Normally we have about 2 to 5 trades per week. So now in the month of July, we only had 3 trades so far. So we had one on the 6th of July, where we basically reversed the position from net short to long. Let me see here. So this one, we sold these 4 contracts on the 6th of July. We had a position which was initially +2, and we reversed it basically from +2 to -2. You see the trade here. And then 5 days later, on July 11, so this week, we again went from minus to positive. So from -2, we bought 4 contracts and reversed again from short to long, because the market apparently was pretty strong during the earlier part of the week. And during the same day, later on, towards the close, or at the close, I should say, we sold out one of the 2 contracts that we had as a long position. So if we just walk through the different trades we had since the beginning of June, we were long, say, for about half a month. Then we had some trading going from slightly longer from 1 to 2, then back to flat, slightly short, back to long, and then gradually decrease it to -1. And then at the end of June, we went to +2. So we had a trade where we bought 3 contracts, you see it here, which resulted in the switch from -1 to +2. And then we stayed with that position for about a week. And on July 6th, on the Thursday, we switched over from long to short. And as I just mentioned, 5 days later, again, from short to long. So graphically, it looks like this. You see it's virtually unchanged, then went slightly longer, back to flat, even slightly negative bearish, and then a bit of a whipsaw here. Stayed with 2 contracts, then went to -2, so short 2, and then up, and now it's up 1 contract since July 11. If you look at the performance on a longer time frame, you see when we started the service on May 12th last year, you see the blue line here, it's going up, but it's a pretty jagged line, so up more than 20%. Still, it's doing something very different from the S&P. And you can see that here, for example, in September, November, we had a strong rally in Enigma while the market was coming down steeply. Then the market went the other way around, so it started to go positively. And we had a very bad drawdown. So in October, November, and still climbing out of that. So we haven't reached a new peak, in other words. So still going up, but not very spectacularly on a modest rate, at a modest rate, I should say. And now the correlation with the market is slightly higher. You can see that it's not exactly parallel to the price development that we've seen since early March. But so the market, of course, has climbed out of the hole from about under 100 to now about 115 nearly. Especially in June and July, we had some pretty strong rallies while we were virtually flat and actually went here up and then gave it back. So if you look at it on a monthly basis, you can see that in this year, for example, we started the year quite nicely, +2, flat, +2, +5, -2, plus nearly 4. And this month, we basically gave it back because we got whipsawed a couple of times. Although we didn't trade much, the positions were not good. So we ended up with about 23% since we started in May of last year, with a drawdown, which at one point in time was nearly 15% and is now around 4%. So that's still a decent balance. So that's an overview of the trading signals, which I showed, the number of trades. So we had 14 trades with 11 position changes and the chart. So that's mainly what I've got for today and for this week. So I don't expect this to last. And with this situation, I basically mean this very few number of trades. It's really exceptional that with the different trading algos, we have that few trades. It doesn't mean that some of the signals haven't been active. It basically means that when one trading signal or one algo generates a signal, for example, says we have to buy, go long, but at the same time, or nearly at the same time, so within the same 15-minute block, one of the other algos does an opposite or generates an opposite signal, the net result is, of course, that we don't have any net trading signal being generated. So that's why there are so few trades. The three algos are basically contradicting each other, which results in few trading signals that are being sent out. But so in a normal environment, as I've shown before, we have about 2 to 10 trades per week. So in other words, it's not exceptional to see like 3, 4, 5 trades in a normal week. So we expect that to resume sooner or later. Now, of course, we are not in the business of predicting. Prediction is extremely difficult. And as someone famous once said, that forecasting is a very difficult job, especially when it concerns the future. I couldn't agree more. So we'll see what the market brings. But so far, we'll just stick to the trading rules as they have been profitable and have been very resilient under different time frames and in different market environments. So let's see if there are any questions.
I did have a couple of questions people asked me.
Okay.
Is it possible to get Enigma auto traded? A friend of mine in Sydney was he doesn't want to have to spend all night sitting up and waiting for signals.
I can imagine. And so on that point, I've been talking to Collective 2. Collective 2, as you know, they basically collect trading signals from different traders, different portfolio managers. And so what I had to do is open a specific interactive brokers account where I trade nothing but Enigma, because if I say, well, I use one of the current accounts where I trade options and futures and ETFs and so on, it would all get trade copied, as they call it, into Collective 2. So I had to open a specific account, which I've done in the meantime. And so now we are still working on connecting it to Collective 2, which is a company called Mexem. Mexem is actually a white label of interactive brokers. So to cut a long story short, it's basically implying that over the next couple of weeks, I should definitely hear back from them to see if it's working. And then we can launch it on an auto trade service, which means that every single time that there is a trading signal, I will, of course, implement it. And at the very same moment that I buy or sell, that trade is being sent to Collective 2, which then implements it to all the subscribers who selected Enigma as one of their trade signal services. So I think it's going to be possible over the next couple of weeks. That's what I hope to accomplish.
Okay, and then I guess along those same lines with the guy in Sydney, do you have like a distribution of what time of day the signals are? I know most of them, from what I've seen, are at the end of the day.
True. So a significant portion is really at the close. So really at the close of the SPX. So then the signal is being generated usually sometimes within the first minute after the close, as late as maybe 5 minutes after the close, but not much later. So that's a vast portion of all the trades. Then there is one other concentration of trading activity, which is between my time. So it's, let me think, it's 2 hours after the opening. So from 5:30 my time, the market opens at 3:30. So after 2 hours into the trading day, till around 1 hour after lunch. So between, say, 5:30 till 7:30. In other words, from, what is this, 2 hours after the opening till 4 hours after the opening. So in the second half of the morning session. Then we also have
11:30 to 1:30 p.m. Eastern. Yep.
Yeah, that's probably a good representation. And occasionally we have a trade at the start of the day, but that's truly exceptional. And it only happens when we have big gaps. So for example, the market is, one of the signals is now long, which is explaining the net long position. Imagine the market would gap down on Monday or on Tuesday, and we are still long or position, then we will abandon the trade and most likely even go short. So that could happen in the first 5 to 10 minutes after the trading day started. But so to sum it up, the majority is taking place at the close, and then this early or late morning period. So after 2 hours into the trading day, and exceptionally we have a trade or more trades. We could have a couple of trades, but it's not on a regular basis that we have these trades very near to the opening of the market.
And then
How
critical would you say it is to get in at the exact price that you did?
It's not critical. Not at all. Not at all. So I tested that out, and basically all the signals that you see, I have executed these, but only 1 minute, at least 1 minute after I've sent out the signal. And I've recorded that. And so the prices, the moment the signal is generated, and then my actual fill, it's usually worse than, but not at all times. And so sometimes it's even better. So it's not that dependent on being extremely fast and very quick in executing the trade. So if, assuming I'm sending out this signal, I mean, you can see it here, that's only 1 minute, 11:26, 11:27. So 1:02, 1:03. So it's 1 minute after I've sent out the signal, then I've implemented the trade. So I've bought or sold 1 minute, approximately 1 minute, because there are no seconds shown here after the signal was generated, but it's not that critical, especially with the at the close signals, because there is a lot of volatility, as we know, around the close. So the market can be going up and down 5 points. So one day it's going to be a winner, it's going to be better, it's going to be a wash over time, I think. So it's not that essential to execute it instantly and immediately. But of course, you need to end up with the same position, say within the hour after the signal has been sent out, and definitely at the end of the day.
The end of the day, especially after the cash market closes, the prices tend to settle down pretty well.
Absolutely, absolutely. And then unless something specific happens overnight, we tend to open around the close of the previous day. So only when there is a significant gap, then of course it could be painful if you have missed a trade and you say, well, I'm going to do this trade tomorrow instead of now after the close of the cash, because you have this at least 15 minutes of high volume trading going on in the futures between the close of the cash and say the official close of the day session of the futures.
Another idea is if somebody joins a service and you're already in a position, which you almost always are, should they wait until there's a change in position, or should they just, whatever you are, like right now, you're +1 MES, would they just put in an order to match your current position no matter where the price is?
Well, the short answer would be I wouldn't do that unless we would be able to buy at least the same price.
Okay.
So if we would be up, say, 50 points, then joining in on the trade or joining the position, I don't think that's a good idea, because in most cases, the average trade profit is not necessarily going to be 50 points for that trading system. So while if you are near the entry price, like for example, if we sold one contract, but of course, here the net position is different because we had a long position of 2 at 44.64. Then we sold one out at 44.71. So if you would be around 44.64, you could put a position on. But of course, now we are like nearly 50 points higher or even more.
It's 45.35. Yeah.
Exactly. So that's nearly 70 points difference. So that wouldn't make too much sense. So in general, I would just simply wait for the next signal and then gradually build the position. And so if we are now long one, and imagine the next trading signal would be buy another one, then just buy another one. If you then abandon one, so we exit one, then you go to flat. So it could take a while, but not too long before we go from a net position to zero and then build it up from there. So there would be a delay, but I think it's going to last maybe a week or so. That it could take until you basically are fully aligned with the system.
Right. Okay. Now that's all the questions I have. I don't see any
Okay.
others in the chat.
Super. Okay. Okay. Perfect. Well, let's see what next week brings, and I'm looking forward to another interesting week.
And if you guys are interested in Enigma, go to aeromir.com/Enigma and I'll put the link up for you. But pretty good system, low drawdowns, very consistent. It's easy to trade. There's no Greeks to worry about. So it's very nicely done. So thank you, Luc, for sharing that with us.
My pleasure. Thank you, Tom.